Shannon Smith from Smart Business Solutions Financial Planning. I want to go through today what's the difference between a managed account, direct equities, and a managed fund. Now, I do have a video on each of these three options of investments that are available for you, but I want to just go through what are some of the differences between them. So let me start out, and do check out the other videos to give you some more detailed view. But if I summarize it, a managed account is really a diversified investment portfolio where every investment is owned by you through a platform, and it's managed by an entire investment team that's basically working around the clock to monitor the markets and do it for you. That's really a managed account, is taking institutional level investment down to the people like you and I. When you invest in a managed fund, however, your money is pooled together with other investors, and a fund manager then buys and sells assets such as shares or bonds on your behalf. You do not own the underlying investments, you own the units in the fund, and the value of the units in the fund will rise and fall with the value of the underlying assets. Direct equities is when you invest directly in the shares in a company, which may be via the Australian Stock Exchange, and you own the shares. So the difference between, the direct equities and the managed account, you've got an investment manager who is actively trading them, whereas direct equities, you bought some shares in a bank and they're just sitting there, and you might sell them, you might not, or unless you've got a stockbroker working on your behalf for that one. So what are the differences? I've just got the differences here in the table. Professional management, so managed fund and a managed account will have someone managing it for you. So they're actively, I guess you could say, ensuring that you're getting the money's worth or getting return on your money. Whereas your direct shares, either you're doing it or you need to get a stockbroker to do it. Transparency, look, direct share portfolio managed accounts, very clear what your money is invested in. Whereas a managed fund, you've got units invested in units, and then you've got to look to the next level to see what it is. Direct ownership of the assets. So the share portfolio and managed account have direct ownerships, and you also have portability without triggering CGT. So if you were with one, or even if you've got direct share portfolio, you can bring it under a managed account and they will trade it for you. There are tax advantages of ownership for the direct shares in the managed accounts, and with the managed accounts, you can really customize it to what your situation is and your goals are. The portfolio reporting and administration makes things nice and easy come tax time. Low cost structure. So a direct share portfolio and managed accounts are quite a low cost structure relative to a managed fund, and there's definitely a lot of reduced administration in a managed account. And the big thing for you, time is money, so you don't have to pay me to do it all, is the no need for a record of advice every time you trade the account. So every time you move from one managed fund to another, you actually have to have a record of advice from me. Or if I trade shares for you, I have to do that as well. Whereas if it's in a managed account, they will proactively be trading the shares frequently. And because we're going under, say, the morning star, we do not need to prepare a record of advice every time they trade the shares, which means they could trade it, twice a day, 3 times a day, and a lot of activity just to get the most out of it. So that's the difference. Let us know if you've got any questions on managed funds, managed accounts, or direct equities, and how you might like to invest your money, and we can chat through that with you and get you on your way. Thanks a lot.